In this video, I'm going to go over the first day of the new channel, Intraday Trading Levels. There were 4 signals this morning. Unlike the daily levels, these are actual buy and sell prices, right? With the daily levels, we are dealing with targets. Here, these are entries. So this channel is right here in the members area. And first, try to watch this video. We'll give you a nice introduction. But for now, I'm going to go over these first 4 signals that I posted in the morning. I begin to, pause between 5 and 9 a.m. Eastern, maybe between 5 and 10 a.m. Eastern. Basically, as soon as I see something of value, I turn the computers on at 5 a.m. and as soon as I do, I'll look for setups. If something occurs, I will post it. So at 5:08, I posted 2 signals, one for gold, one for the Russell. I think the gold did not trigger until later in the morning. So let's talk about the Russell first. So the Russell was a buy at 2076.5 or a sell at 2071.5. All right, so 5:08. This is where I posted the signal. A few minutes later, price hits the trigger to sell. This is a short, 71.5. A bounce, take a bit of heat here, and eventually price goes down. Now, here is the thing with these signals. They are off of a much smaller time frame than the daily, right? The daily levels are off of a daily chart. This is a much smaller time frame. It's not 1 minute, obviously. I'm just using 1 minute so you can see the progression of the signal and the trade. But it's not 1 minute, but it is what I consider to be a small time frame. So the smaller the time frame, the less of a target you can reasonably anticipate. So these signals are really meant to be scalps. So what do I consider a scalping kind of trade? Well, in my opinion, between $50 and $100 per E-mini. That would be kind of a scalp. Now, what we're going to see later is that, and I don't want the things get too complicated here, but basically a trade like this can start as a scalp and grow into a very big trade if the energy shifts from, or maybe transfers from the small time frame that these signals are based on to a larger time frame, and then a larger move occurs. But in the beginning, it is simply meant to be a scalp. $50, $100, $150, whatever, but something fairly small. So this was the sell on the Russell. So another thing that happens that you will see a lot with these signals is that market retests them a number of times. And again, because this comes from a smaller time frame, most moves will not give big continuation. Again, back to my point of this is supposed to be a scalp trade. As long as it stays on a smaller time frame, you're going to see this kind of a back and forth until there is a transfer to the larger time frame. But for now, this was a nice scalp, gave you like 30 ticks here on the Russell, and triggers again. So I would not take another short as price hits it from underneath, because price can just keep on going. What you want to see is, if you're thinking of taking another short, you want price to get in and then down again and hit the sell, not just a short here. And ideally even slightly higher. That's not too bad. That is okay. Prefer slightly higher. So here is a price going kind of reloads, right? Goes again into this area between the buy and the sell level, between 71.5 and 76.5, and then hit 71.5 again for another scalping trade. Now here's what happens here, right? So after this another successful scalping trade, price comes back again. Here is what I must mention here now. The more times a trade triggers, the lower the probability becomes of it succeeding. It's just how it is. The first one is terrific. Second one is probably okay, and you see on the second one, not as much was available as in the first one, right? And now it goes for the third time. I would leave it alone at this point. But in any case, let's say you didn't. Let's say you missed those because it's too early in the morning. Well, then price goes up, hits the sell level again, and again, it's fine. I mean, it's still this signal continues to be valid. It's just that again, the more times it hits, just each time the probability of success is slightly lower over a large sample, right? And again, the point of you're looking for scalps, right? Because price will continue to do this. This is a small time frame, and that's why this happens. Here's another short, and again, definitely enough for a nice scalp. And price comes back again. There you go again, right? So that's at some point I think it hits the buy level if I'm not mistaken. Yeah, here we go. Here is an example of price hitting the buy level now with 76.5 pretty much to the tick, and this is a losing trade. I mean, this is just a losing trade to show you that it's not all, all profitable. They are losing trades. You're taking a loss here. You need to decide on the risk you're willing to take. In this channel, I'm not listing targets or risk, so that's going to be up to you. But I think we can agree this is a losing trade. And now price hits the sell level again. Is it still valid? Yes, it is. Yes, it is. It's now 840, and the short side was hit already, what, 3 times, I think? And now this move, if we can, here is an example. So I want to show you this. Here is another scalp, right? So here is a short, and again, same exact thing, coming in, reloading. Is this still valid? Yes, it is. As long as we understand, the more times we're getting hit, the lower the probability of success. But this is an example. So again, a scalp here. Price comes up again, reloads again. It's what now, the 5th time? And another short. So again, you're not taking a short as price is hitting from underneath. You're waiting for price to come in. Let's kind of get in here. You're waiting for price to come in, so it makes a high of like 73.7, right? The short is 71.5. You're waiting for this move in. Now you can activate the short again if you still want to take a short, right? It's already gave you profits on like what, 5 trades, 6 trades. I lost count. But now something interesting happens. This is the example of a transfer of energy to the higher time frame. Now finally there is this transfer of energy, and now all of a sudden there is a serious move lower, and this is 20 points. Sorry, I had a phone call. So here is a move of well over 20 points, well over $1,000 per contract. But to get here, look how many times we need to take that short. Do we know when this transfer of energy will take place? No, we don't. At least I don't. It happens most of the time eventually, but there is no way, at least not for me. I cannot tell ahead of time when this will happen. But eventually, most of the time, it does happen. Price is not going to stay in this zone of a lower time frame. Eventually, the higher time frames do take over. So this was the Russell. let's look at gold. So gold was a buy at 40, 23.40. So 23.40. The post was around 508. It triggers over here. This came close, and this triggers here at 40. It triggers and retreats. So now here is your question, right? Where is your risk? I would look to the left, and my risk would be either slightly below this pivot over here, or even slightly below this pivot. Now again, I'm not telling you what your risk should be. You will decide that on your own. Let's say you get long here and you take a stop. Well, that's all right. So you take a stop. In reality, the pullback was about 19 ticks, so $190 per contract. If your stop is tighter than that, it is kind of tight, But again, if you get stopped, you would just wait for the price to trigger again. And with gold, what was interesting, so here is a move up. Again, scalping, just kind of a scalp, about 20 ticks, right? The high for about 22 ticks. So if you lost whatever here, you made it on this one. And now what happens is price comes back but does not quiet. Again, remember what I said, I like price to come down. In this case, it just pretty much touched the trigger. That's just the break, It touched the trigger, and it immediately, unlike the Russell that stayed in the lower time frame for a long time, the gold immediately got this energy that it had got transferred to a higher time frame, and it just went all the way up, like $800 to $900 per contract. This was somewhere there. So unfortunately, let's say you had the hard target that you took over here. Well then, this is definitely not enough, according to what I've been saying, of price coming in and then recovering for another long. So this, just the way it worked out, you would not participate, I guess, in this move if that's how you managed your trade. And again, I'm not telling you how to manage your trades. In any case, price goes again like $800 to $900 per contract here, and now comes in again. You see this? Now it comes in here, and now you're ready. So if you did not participate before, this trigger is still valid. Now price does come in, and you're just waiting. So it came close, but not quite over here. You're still waiting. You got to be patient. Here it is. Breaks through immediately, gives you like $200 per contract, about 20 ticks right here, very fast, and more. All right, so sometimes it would happen that you would miss the original move. It's a shame. You got to be patient. You need to wait for price to come into this area again. Most of the time it would, sometimes now, but most of the time it would, and you just have to be patient. You understand that you want to trade on your terms, not on the market's terms. Okay, so right, so this was this, so this was gold. Let's look at, I think next was crude oil. All right, so crude oil at around 630, 631 was a buy at 82.05 or a sell at 81.80. So 630 price was somewhere here, and the sell level hits first, bounces up, and then gives you about 11 ticks, 11, 12 ticks, and comes back again. Like what? Like the Russell. Remember the Russell? Same exact idea. You must take a scalp here. You just, and you can never allow a winning trade become a losing trade. So as I said, for me, a scalp is like $50 to $100. You have it here, and then price comes right back in. Again, remember, these levels are from a lower time frame, and in a lower time frame, this is what happens. Now, price comes in again. You're ready to take a short again. If price comes down, to 81.80, or if price breaks through 82.05. So you're just waiting now. You're just waiting. You're not going to assume anything. Let's see here. This here is a high of 82.05. So this is a trigger to go long. Price comes down about 11 ticks. Again, I'm not going to tell you what your risk should be. Less than 11 ticks in crude, I think it's very tight, but I will leave it up to you. If you get stopped, you can get in again, of course. So on this bar, there is a high of 82.12, 7 ticks. Remember, I said between 5, so it will be between 5 and 10 ticks, $50 to $100. This is probably a break even. Once it was up 7 ticks, you should put your stop at break even. If you did not just take an outright target, probably got stopped at break even. And it does a lot like what the Russell did, right? In and out, in and out. That's because the smaller time frame is still holding on to the price. So back and forth, comes down again. Is this still good? Yes, it is. Trigger long. This time it goes up about 10 ticks before coming down, right? So very similar to the Russell. So you see, the gold was different. Gold very quickly kind of moved into the higher time frame. Not the Russell and not the crude here. So again, price comes in. Is the trigger still good? Yes, it is. Comes in again, another 10 ticks. So a number of times now, between 5 and 10 ticks, right? This is what you're looking for. Comes in again. Is this still good? Yes, it is. So you get the idea, right? Back and forth, scalping trades, and then eventually a move 20 ticks in the money just to see it come back. So again, the lower time frame is holding on. This would be considered tremendous chop, and most indicators would lose money here. But because you know where to go long, you can still be profitable here. So here is the shame of it, I guess. On this time, there is no real deep move below the trigger. It just touches the trigger. It does the same thing here. Just touches the trigger, and now there is a transfer to the higher time frame. Price moves about like 50 ticks, almost 50 ticks. Coming back again, now that's interesting, coming back and now hits the sell level at 81.80, the low 74, so 6 ticks in the money, reloads, right? Again, gives you like, the low here is 71, 9 ticks in the money, and then to the long again. And here, now you see again the higher time frame takes over, and now we see a big move to the upside. 80 ticks and more. Retracement, here is 100 ticks, right? This is $1,000 per contract, 83.05. I am not saying you or I would be able to hold on to this. Again, these signals are designed to be scalping trades. I'm just showing you what happens when eventually the higher time frame takes over. And then you can easily hit $1,000 per contract. But when will it happen? Will it happen immediately or after 5, 6, 7, 8 triggers? That part I do not know. Okay, so we have over $1,000 here per contract available. Doesn't mean you're going to get it. It's just available. And the last one was the Nasdaq. Okay, so the signal in the Nasdaq at 9:15, I posted to buy 963 or sell 915. So at 9:15, here price is around 57, so not too far from this buy trigger. And shortly after I posted it, indeed price hits, right? Hits the trigger long. and gives you as much as about 22 points, right? $440 per contract. But again, just to remind you, this is a scalping signal. So even if you got 5 points, 6, 7 points, that's fine, because more often than not, price will come back. Because until, again, I don't want to keep repeating myself, but until there is a transfer of energy to the higher time frame, this will keep on happening, right? Go in, right? Signal, you get whatever you can get, and price comes back below the trigger. Once again, and below the trigger. Once again, and below the trigger. Here is another move to the trigger. Is the trigger still valid? Yes. And this time, the high is only 74, so about like 11 points. And then again, right into this range again, right? So, and then the short side gets hit, and the short side immediately being taken over by the larger time frame. So gets taken over by the larger time frame, brings it down from 915 to around 840, right? So this is over $1,000, well over $1,000 per contract here on this move. Watch what it does. Comes in, triggers again. Again, a move this time to around like 811. So over 100 points, over $2,000 per contract on this move. And again, I'm not saying you'd be able to hold on. You or me, I'm not saying you would be able to hold on to this trade. I'm just showing what is available. It is up to each individual trader what is their risk and how much they're looking to get out of this trade. Price comes in again and again trigger short. Is this still valid? And I'm gonna repeat myself, it is, but keep in mind, the more times this trigger gets hit, the slightly lower probability of success there is. So just make sure to take your profits quickly. After the fact, we can see that from 915 down to like 877, a whole bunch of points, but this we know after the fact, not in real time. For example, on this initial trigger, the low is only 905. So this is less than 10 points that's available here before price comes back. And depending on what your risk is, it could have stopped you out. So again, yes, these triggers remain valid, but be careful because the probability of success does decrease the more times they get triggered. So a number of triggers again, boom, boom, right? It was and here is one that would not work out because there was not much here at all. This is a low of, so this is less than 5 points over here. So again, right? I hope I'm making the point here. You don't want to just keep on trading here. You should have your daily goal, especially for this kind of an approach, and just be done. Then the long side gets hit, 963, and again, the larger time frame takes over. Price goes up. Again, over $1,000 per contract on this move. I don't think it gets retested again. Nope, just keeps on going. Doesn't get retested, and this is toward the end of the day. Okay, so yeah, that's it. So just to make one last point is in that volatility has a lot to do with how much is available on these trades. On an average volatility day, would I consider today to be average? I actually would. I think today was an average volatility day. And on an average day like this, most of the time, at least one instrument, but really more than one. I think every single instrument here hit a potential eventually of $1,000 per contract. Again, I don't know when this transfer from a lower time frame to a higher time frame will occur. I have no such knowledge. I just know that it happens because we see it all the time. But a lot depends on volatility. This is July 4th week. So as we get closer to Thursday, for example, we might see decrease in volatility, a lower range, and then obviously there was only so much you can squeeze out of these markets. But under normal volatility, most of the signals that I post will have a potential of $1,000 per contract. When I say contract, I mean an E-mini, $1,000 per contract move. But it does not mean that that's what you should be going for. My advice is use it for what it was designed for, and this is a scalping approach to trading. If you are more skilled, you can get a lot more than a scalp on these trades. Get in touch with me if you have any questions. Also, it does help me if you just kind of give me some kind of signal here. I know there is no text allowed on this channel, but if I see a lot of people leaving at least some kind of a sign that this helps them, because it is a bit more work for me. I don't mind doing it if it helps you. So just let me know that it helps you. It just it motivates me. Okay. All right, everyone. Thank you all. Get in touch with me with any questions. See you in the next video.